Simply, what are you and your senior partners hearing when you speak to your clients?
Good morning, Tom. Yeah, the conversation is fairly constant, the proverbial 24/7. What we're hearing is certainly a focus first and foremost on liquidity. Secondly, looking at what they need to be doing to keep their business moving ahead to the extent that they need to be doing things to deal with their clients, to deal with their employees, and really looking at all the various aspects. But there's certainly a great deal of foreboding as to what's going to come next year.
What we see right now, Frank, and certainly on this April 1st with rents due, are two Americas. John Edwards, of course, partitioning that eloquently years ago. It seems to be business as usual for corporations, while so many of America, Main Street America, need a direct income substitution right now. How can corporate America explain to Washington the urgency of aid to the people of this nation?
Well, I think corporate America understands it in some ways better than Washington because they recognize the knock-on effect as people stop paying their landlords, people stop paying other bills, and then that has an impact on the landlords who stop paying their loans. And it puts the banks in a further in a precarious situation. So I think corporate America, in many ways, understands the fragility of the American economy and the weakness of many consumers far better than some of our elected representatives do.
Frank, give me a sense of what deals, M&A in the U.S. that was about to happen or that was already announced. What will happen to it now? Will it be postponed, delayed, or just canceled?
Well, I think deals that were signed and announced by and large are going to continue along, and they will happen. We just heard the news about GE closing their transaction with Danaher. I think most major transactions will continue forward. Certainly the ones that I'm working on between signing and closing are moving apace. They may be a little bit slower to complete just because regulators are working remotely, so it may take a little bit longer to get approvals. Deals that were not announced, I think they fall into three buckets. A third of them, roughly, get put into abeyance and probably don't happen. Another third get put into abeyance and then come back at some point. And then another third we see are moving along slowly. But they will be substituted, the ones that don't happen, will be substituted by deals where, because of the liquidity issues, companies will decide to sell themselves. Companies will decide to sell assets and businesses that are non-core. So, we're going to have a very weak first half in M&A, but at some point in the second half, you're going to see a couple of months or so that are going to be very, very strong as that pipeline really moves forward.
Is there a danger that when we come out of this, the economy kickstarts, if companies are about to fail, they get taken over? So this is the kind of, the bad kind of M&A, the M&A that comes out of desperation.
Right. A lot of what we saw in 2008 and 2009, there's certainly that possibility. I do think that one of the factors with respect to the government stimulus packages around the world is that fewer companies will feel that sort of desperation. That's at least the hope.